What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about how to handle tilt or how to handle losing trades. Okay, so today I took 2 L's out of my 4 trades, and the other two, of course, were wins. So I went 50% today. How do you handle that? Okay, a lot of people always think like, oh, you can't lose when you're trading. You can't lose. It's like if you lose, then you're not a trader. Like, no, that's not how it works. But let me explain that, and then we'll explain what tilt is as well. So tilt is when a trader has a losing trade and they start to trade with wild emotions. Okay, trying to get back what they just lost. So it's revenge trading. Well, how do you handle that? Like when you lose, what do you do? Okay, because a lot of people can't handle it. Okay, and it takes losing quite a bit in order to understand how to handle it. What is a loss? A loss is a lesson. Okay, at the end of the day, it's just a lesson. And to handle tilt, you need to document how you feel on each trade. So you need to understand, hey, why did I take that loss? Was it my setup and did everything go well, but the market just didn't go in the direction that I wanted it to from the setup? And that happens. You might see a setup that's almost like 90% guarantee and it just doesn't go through this one time. That's okay. But if you get a losing trade, walk away. If you can't handle it, walk away. Take a walk, go outside, get some air, take some time off from trading, or you might want to start paper trading just to get back in the flow of things. Okay. How do you prevent tilt? Well, you prevent tilt by first paper trading. Okay. And you could think of trading as a game. And what you really want to do in the beginning to prevent the loss in the first place is you want to pretty much have setups. Okay, you need to have setups, and you need to have a system with rules in place to prevent you from taking on bad trades. And if you do take a good trade and it just doesn't go in your direction, then that's fine. Okay, that's fine. We go back to the drawing board and analyze why it didn't go in the direction. And your setup might not always work, and that's okay. That's normal. Some of the best traders in the world, they lose more than they win by a lot. Okay, their win rate is probably only 30%, but what they understand is sizing. So a lot of people don't understand that. And in my group, my Discord, and when I'm talking to other traders, I'm always telling them, listen, do you have a setup? And most of the time the answer is no. So if the answer is no, then automatically you don't need to be trading, you need to paper trade. But if you have a setup, then you need to stick to only that setup. And if you see something else that you think it can yield gains, but it's not your setup, then that's fine. You might want to reduce the amount that you put on that trade. Okay. And then there's different setups that you can have. If you don't just have one, you might have 3 or 4 setups. Well, you need to grade those setups, and then you need to grade the trade. So if the trade is like an A plus trade, it's really good, then you might want to put like $1,000 on the trade. But if it's a B setup and it's like not the highest win rate, it's okay. Well, instead of $1,000, in this case, you might want to put $400 on the trade. Okay. And then if you grade it even less, like a C setup, you need to put $100 or $200 on the trade. Okay. And I'm just throwing out random small numbers, just to give you a concept, to conceptualize this. Okay. So at the end of the day, those 2 losses that I took, they weren't part of my setup. So I shouldn't have taken those losses anyways, because I shouldn't have taken those trades. Now, the fact that I knew that and I put in a small size, I put on small sizes on those trades, prevented me from losing a ton of money, because I knew those trades weren't the best setups. They weren't the best quality setups. So I really shouldn't have been taking them anyways. But I did want to put on a trade, which is not good. Again, stick to your system, stick to your setup. But I'm only human. So I documented this and I'm learning from it. I'm going to learn from it. But at the end of the day, it wasn't my setup. Wasn't something I should have been trading. So what I did was I used smaller size, really small size. So when it went in the opposite direction and I got stopped out of the play, I took a very small loss. And then later on, when I did see my setup, I sized in a little bit more and I ended up green on the day. So you keep that in mind when you're trading. You need to understand, hey, is this my setup? Does this look good? What's the quality of this setup? Okay, what's the quality of it? And then if it's not the best, then don't be putting in your entire account just because you're thinking about dollar amounts, like, oh, I want to make $1 million bajillion dollars. And that's what's wrong with a lot of retail and a lot of traders who just keep repeating the same thing is you're putting in too much. You're just thinking about the money. You're not thinking about the setup. If you find a good setup, then you put the money in. But you can't just be looking and say, oh, this looks good, and then put money in that you think will go to $1 million bajillion dollars. You can't just put your whole account in. Okay, it doesn't work like that. That's not trading, this gambling. If you want to gamble, go to Vegas. Anyways, I hope this helps someone out there. Again, prevent losing. Oh, a couple other things to prevent losing. Don't trade before 10 a.m. because there's large fluctuations in the market. 10 a.m. Eastern Standard Time is a reversal time. Make sure you have a setup or a couple setups. Make sure you know how to grade trades by just reviewing the charts and seeing what would yield a good trade. Okay, you can look at risk to reward ratios like a 2-to-1 ratio, 3-to-1, that type of thing. R values, you can look at that. Or if you're not ready to trade, then you want to paper trade. And paper trade for as short of time as possible. You don't want to be paper trading forever because it involves no emotion. When you're trading with real money, then you're putting your hard-earned money at risk, and it involves some emotion. Therefore, you're going to be emotionally invested, and you'll see how you react when your emotions are in the game. So hopefully this helps someone out there. Remember, step away, walk away. If you aren't able to take losses lightly, just walk away. Walk away. Don't end up trading ridiculously after oh, I need to get that money back. That play is done. Now we're focusing on looking for another quality setup. Have a great day. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and